welcome back for Bitcoin Technical Analysis. I'm your friend Rocky Outcrop. I hope you're all doing really well out there in the world. So thank you so much for joining me today. What will we be looking at in the charts? Well, of course, we've had some quite hectic price action over the last sort of 24 hours, and we'll take a look at that in a moment. But we just want to frame it all first off, would you look at that? The rising wedge / symmetrical triangle bottom line support. We're over here on the Coinbase chart. We've been talking about these two purple lines for quite a while and saying that we're, in a rising wedge. And regardless of the top line at the moment, which changing the top line, of course, would change this from being a symmetrical triangle, ascending triangle, etc., etc. So just regardless of that one, just the bottom line here, which is going to stay the same regardless, really. You can see that we've come in here and found support with these bodies, the body close of yesterday's candle being within the structure of this rising wedge. And today's price action, of course, opening up there and then moving back up to that line that we've been talking about for the longest period of time, where we know that it's a sort of scalper's dream, this line here, where people have been taking profit since the dawn of time, it seems like. Just since back over here, really, on the 30th of April. And since then, we've had this line be quite a crucial area for us, our little zone. So we can see that the rising wedge has been operating as support for us, and that leaves us in the macro sense, in the bigger from the bigger picture, in the same sort of a position as before. So it wasn't just the symmetrical triangle or rising wedge, lower support line that actually supported us. There was a couple of other things too, and we can just take off the drawings off the chart first off and point out that the wick came right down here to where the 55 EMA is, and that was interesting. And the the 50% line here is where the bodies are for the on this Fibonacci retracement. And of course, it came down close enough to the 618 down below here on this Fibonacci retracement as well, which is in and around that 236 area, of course, at about 8950, where that 236 comes in at. The price has actually only made it down to sort of the 9,000 area. And of course, 9,000 being a round number was part of that whole sort of support aspect as well. So what does that leave us with? Well, overall, it's a higher low. So again, removing the drawings from the charts, we can compare this low that we've got in here, should this, actually turn out to be the local low, is higher than this low over here. Now, after this price movement up towards the top, what was one of the things that we talked about? Well, we said that the price action subsequent to this movement up, when we got rejected and came back down again to this sort of crucial zone, was not necessarily in and of itself satisfactory enough to be considered to be a local low. Whereas this price action over here, it could be. So that's more interesting, and definitely is something to be sort of taken taken as a positive for the bullish case scenario overall. In terms of the bearish case scenario, off the back of the same sort of thing, we have overall just come down to here so far, and we've not managed to make it back up above that 9555 area quite yet. And in which case you could be looking at this and saying, well, is this just simply going to be along the way? We could have a candle like this one, as we saw here, similar sort of size candle, which is then followed up by another rejection one. And if we find the prices back down below those other support levels that we had before, then we will need to be bearing that in mind for the bearish case scenario. So bringing back up our notes onto the screen, overall, again, we could be in for a while more of the same. So providing that the bears don't actually win out here in the longer time frame and break down below the sort of the 8,000 into the 8,000s again, below that 9,000 area, and looking to put in a lower low compared to over here on the 25th of May, then overall we could just be in for more of the same. Now we have had this drawing on here, this rising wedge, showing that there's quite a lot of room for maneuver in here. And there's other things we've got too, like on the CME chart here, you can see that there's plenty of room for maneuver left inside the shape of this symmetrical triangle here. So, we still have plenty of time left to go. And indeed, even if I make this sort of match up with the spot price type angles of things, so that the wick of that, the wick here, this wick here of this particular candle, these ones going through it, and the most recent one, well, actually, I suppose just using these bodies of this wick and this wick here to sort of line it up, you can still see anyway that there's plenty of time left inside this symmetrical triangle for more of the same, should that be the case. So that's something to be bearing in mind for sure over the next wee while when looking at the prices. So we could be in for more of the same for a while. Now, we'll have to look to the levels, and they're still the same levels as before that we were using. So we can see here with the white writing, and I'll bring this up onto the screen a little bit more so you can have a bit of a closer look at that in a moment or two. But, really overall, I hope you can read that fair enough there. These targets that we had before are still exactly the same. As we came up here to the 9850 area, breaking above that meant that we got, a touch off the 10K area, back down again. So when we went below the 955 area, we went down to the 9,200 to 9,300 area, as we saw with this sort of wick and body closing. And then the body of the day opened back up again, and we're moving back up towards that the 9,500 area yet again, where we have that blue serrated line at. So everything more or less actually stays the same in terms of the targets. Of course, there's plenty of crucial ones around. And really, the most crucial areas for the price action are down there in that 9,200 to 300 area, where you could be breaking below the sort of so-called support of this rising wedge line, and indeed the 10,200, 300, 400 area, where you could be breaking above the support of or the resistance of this particular line on the rising wedge as well. Those two areas will remain the most critical zones for us in the meantime. So we can look to the levels, and they're the still levels that we're using, and that's them on the chart there in white writing if you want to read through that at your leisure. And we can also look into the other BTC charts for more info, and it's more or less the same. It's just that we found that we've got different type drawings on here, from before, and the levels drawn out here exactly. You can see the price action today, for instance, is stand exactly between these two levels. As you've seen, if you're subscribed here, and please do subscribe, I would really appreciate it. Big shout out to everybody who's done that so far. You can see that we're between these two areas just here at the sort of the 9,250 and the 9,550 area for us. So, there's a couple of interesting, you can see across the other charts anyway, just purely based on the fact that we have already drawn in a few different potential outcomes for us. That on the one hand, like I said a moment ago, the BTC and the CME charts, we could still be in it for a while. We also can see that the structure here remains intact, and there's a couple of different ways that you could be looking at this. For instance, you could have thought maybe we were breaking down below this green line of this channel that we had drawn on here on the Bitstamp chart. Now, I'm always quite flexible with these things. This would be the most bearish sort of outcome, for instance, for us to remain below the 9,500 area means that we're remaining below this channel here, which means you could potentially look for a sort of breakout from the channel going somewhat down towards where these moving averages are coming in at. This is the 24-hour chart, and you can see that while we came down to the 55 EMA and tested that, we haven't actually tested over here on Bitstamp the 50 simple moving average, which is something that Bitcoin is so often want to do after a cross like this on these charts. Actually, no, wait, give me a second here. That is set to the wrong number. Let me just see. I'll just yes, that's set to 70 because I'm trying to see where it would be on the CME charts. Excuse my ignorance. We have come down and tested the 50 simple moving average here, but the point being that on the CME charts, that we haven't actually come down and tested the 50 simple here where they've crossed, as Bitcoin is so often want to do. Not just Bitcoin, but any asset that you're trading. Whenever there's a golden cross, quite often they come in to test one or both of the moving averages, or a death cross indeed, the same scenario but inverted. And that's not happened on the CMEs yet. So the most bearish sort of things that we can look to at the minute are the fact that we're below the sort of the channel area that we had drawn in before. Of course, that's debatable. We're below the 21 EMA and that blue serrated line on the Coinbase chart of that resistance in around the 9,500 area, and breaking down below that and going down below this other line that we have on here as part of the symmetrical triangle, using this purple line and this white ascending diagonal line here. We'd be breaking out of that ascending triangle at the same time if we did come down any further than the 50 simple moving average. So, there's your bearish scenario for you. And really, currently underneath the 21 EMA, as you can see there on all of the spot prices. Now, there is a dynamic as well with the moving averages again. Here, where you can see on the CME charts, the prices have managed to move back above the 21 EMA, which is in at 9,450. The current prices on CMEs are 9,560. So we're in above that area currently, and that's good. We're doing, in terms of the CME charts, in terms of the bullish case scenario, and looking towards this as being a local low and us moving back up again and trying to come in for quite possibly another lower high, essentially, which is what this was on the CME charts here on the 10th of June compared to the 7th of May. To do that all over again, you'd be looking up towards those high 9,000 areas, which in terms of spot would put us back up towards the 9,850 area again at the top of this line here. And of course, the comparative that I was making there now between this high and the previous one, which was higher on the spot prices, wasn't actually higher on the CME prices. You just had a wick up here, and you didn't actually have that close come in for you to make it so that it was the real deal. Which means, in a sense, the bearish case scenario, in some ways, looking at the tops, is stronger than the CME charts, but the sideways case scenario is quite strong here, given where we are, and even a bearish movement down towards the high 8,000s would leave us within this symmetrical triangle in general, and there's plenty of time left for that. In terms of this, looking at this one, we could be moving down below the 50 simple, and whatever, and that would be quite bearish, and then at those points you'd be looking down towards the 618, of course, and the 8950 area, where for those supports to come in at. I'll just yet again just in terms of reminding folk about this interesting dynamic of the CME sort of golden cross versus the spot price golden cross, by changing those two numbers to 70 and 250. This is where they are, how they line up on the CME chart more or less. And you can see that 50 simple comes in at that sort of 8,560 area. So, of course, that's what you need to look to if you were to be breaking on down past this and hoping for a turnaround at some point off the back of this golden cross, for the longer term future of the coin. Some people will be looking towards the 55 simple, 55 exponential, or indeed the 50 exponential. Just change that to 50 so that, you can say that. We came down and touched that and being supported by I use 55, so I'm changing that back to 55 at the minute. And you could maybe make the comparison as well and say that, when we crossed over the 200 and the 50 EMAs crossed over, that's the purple line and this green line back here, that you're coming in for a retest of those things. I'm sure some people in the world are talking about that. But of course, in terms of just, the golden cross and whatnot, the golden cross, talking about because there specifically is one, and that this is just a cross, and to call it the golden cross is wrong. This is the golden cross. It's when the 50 simple crosses the 200 simple, and that over here has just happened recently on the CME charts, and we've not had the test of the 50 simple quite yet, but we have had, in terms of the sort of, let's draw a line down the middle for the positive case scenario and change this back to 50. Change this back to 50 here on the simple moving average, and 200 on the other simple moving average. And, we had this cross back here, and we've come down and retested this one, giving it a sort of confirmation, you could say, of the golden cross by having not broken down below that, and maybe we can look towards the future. And of course, we've had the significant pullback in prices in terms of where that wick came in at to where the wick came in down there of around about 15%. So that's been, a fairly solid test, you could say. But there is also still the possibility of further downward price action, as we've as I've been kind of talking towards there now. So we've done that, and surely the bullish enthusiasm surrounding the 10k level has diminished somewhat. It will come back with a move above 9555 area though. So out there in the world, all the people who are all talking crazy bullish stuff about how Bitcoin's only ever done whatever, blah blah blah, and all the stupid stuff that you've been watching on YouTube, no doubt, over the last wee while, or reading on TradingView ideas, etc., etc. That will all have diminished off now as they put on their FOMO greed fear jackets and everything else, and or else maybe they just screaming about buying the dip. Who knows what they're doing, because I'm not looking into it. But just to be aware that will all return in force above 9555. And what they'll not be justifying for that, of course, is they're not looking at 9555 as an area for resistance, because they're not conscious of it necessarily, and they're not conscious of where the 21 EMA is on the daily, as we've been talking about for the longest time. But that's what you'd be looking for in terms of moving back up above there. So is there anything else that there's worth talking about in terms of Bitcoin? Well, let's just do what some people do and take a look at some news just real quick. Binance goes live with quarterly Bitcoin futures. So, it risks that, but it warns it could be risky. Lol, crypto trading risky. Who would have thought that? No way is it risky. Traders can go long, expecting the price to go up, or go short for it to go down, says this amazing article by decrypt.co. Who wrote this one? What's this? Written by Tim Copeland. Well, Tim, you're Copeland well with this one, with these big words like long and short. It has offered futures contracts since 2019, but this article points out that they were perpetual in italics contracts, and that can end at any point. At any point, they can end at any point. Well, nah. How much does this person? Is this person a trader? I highly doubt they're a trader. They don't really know what they're talking about. Oh my goodness. They can end at any point. Yes, of course, Binance could have just pushed the stop button on them. But perpetual, the words, the clues in the name there, buddy. Perpetual. Really, presumably there's actually, fees and stuff like that. Presumably Binance charge you a maintenance fee or sort of a funding for using the perpetual one. And presumably the difference is that the quarterly futures that end on the corresponding last Friday of the 3-month period will actually just have no funding associated with them, but have an expiry date, which is where your trade-off comes in at there. Of course, you get your up to 125x, which can increase potential winnings and losses. Oh my goodness, this article is something else. We're late to derivatives, says Binance CEO Japan Chao CZ. And he's right, he is very late to it. There's other places out there which I prefer to use myself, such as Deribit. Anyway, he loves the word Safu because everybody loves the word Safu, and he wants to own that mean word. In fact, you got to wonder if he even knows that it isn't. The way he says it so often makes you wonder if he knows a little bit. Of course he knows. Of course he knows that that's the made up word. Of course he knows where that comes from. Wassa. Woo! Pick a net. So anyway, why am I talking about this? Well, basically, I just wanted to point out that there's now that chance for people to use the futures contracts here on Binance that have the presumably no funding but have an expiry date in order to hedge their positions. Now, you might not be used to hedging your positions, but that's something that you can do. And of course, if you'd have, for instance, been long from here naked up to this point here, then you could have hedged on a futures contract without paying any funding for the privilege. As the prices went down there afterwards and the funding on the perpetual contract flipped to being paying shorts paying long up until this point here, then uncovered your long to make it naked again, in the sense having removed your hedged position there. And then as the prices went back up, some things that you can look to is the differential between the prices. What premium are you paying on your futures? One quick way of doing that, of course, is just looking at what prices currently, how much contangled the CME charts are. Is just one method of looking at that same sort of thing, but actually it's calculated quite differently for things like the futures contracts on Deribit and whatnot. And you can look into that in your own time. But you can check out that sort of how that's going. Of course, that's kind of almost like looking at the theta and the volatility and stuff like that, but that's all too complicated. We'll not get into the details, but there's things that you can do using futures to be kind of interested in, to kind of like gauge the market sentiment, for example. And one of those sorts of things as well is kind of looking at this perpetual contract and seeing the funding rate as well. So a lot of people will get confused about these things. In fact, it's one of the most commonly confused things. It's kind of like bull flags, and that people like latch on to talking about these things when they haven't really done the full research into it. So I'd just be wary of what you might see out there in the world about it. And I can't really be bothered trying to go in to explain it or to go on the record with an explanation about something, because like I say, it'd be easy to get confused about these sorts of things, and I'm not going to sort of go down that road at the minute. But it's something that you can look to in your own time when you're trading. Reminders then, here's the critical levels that you've got, and that's everything for you. If you want to read that in your own time, you're totally welcome to. I suspect that you're subscribed here. If not, then hit that button. What you're doing, waiting for, don't be crazy. And you're getting the benefit of these levels time and time again. Anyhow, I'm going to tune in now. Thanks so much for tuning in. I'll catch you in the next episode.